Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now the data is in, and today what we're gonna do is my Friday housing market update. I was trying to do them Thursday, guys, but Thursday is just a really bad day because Fred Economic Data doesn't update their charts until noon. So it's really hard to do videos past the morning for me because you guys know I'm not a full-time YouTuber, but this is gonna be a really bonkers video today. What we're gonna do is we're going to start by accessing my local housing market through the MLS, our multiple listing service, so that I can show you guys real-time data. Now, once we're in there, I'm going to show you the construction community that we've been watching, and they have finally started doing price cuts. So they held out for a long time, but I'm going to show you guys they finally started buckling and started cutting their prices. But not only that, I'm going to show you a community where I believe it's going to be a ghost town because they keep dumping a bunch of new construction onto the market before they can even sell their existing supplies. And then I'm going to take you around in a small area and I'm going to show you guys some massive price cuts that are happening right now for various price points from about 600,000 to about 300,000. So that's the price point I'm going to stick at for today's video when it comes to price cuts. Also, Fred has now updated their active inventory chart. So we're going to look at what happened last month and whether or not we actually had an inventory increase or not. And then we're also going to look at new construction inventory, and we're also going to look at months of supply, which in my opinion, months of supply is a better indicator at telling us how much inventory we really have as compared to the demand in the market. After that, we're going to dig into the mortgage rates. We're going to look at everything residential mortgage rates because we already know that that is what is controlling our housing market right now. So we're going to look at the poll, we're going to access Fred, and then we're going to stop at bonds and try to do another guesstimate for next week. And then what I'm going to show you guys is a challenge that I created under my community tab where I'm offering you guys a $100 gift card for whoever has the best answer. So I'll explore that with you guys. Now, remember, you guys, I'm not your financial advisor, even though my bio is as someone that got trapped upside down in my house in 2008. Once I was trapped upside down in my house, I lost my job because of recession. I could no longer sell my house. As a result of that, foreclosure, bankruptcy, repo, and a tax lien. And also my bio is as someone that crawled my way out of that situation to put myself in a much better situation right now. And also my bio is someone that will take it personally if you don't win, because if you guys aren't winning, then why am I doing this? So do me a favor, you guys, for my efforts, like this video, subscribe if you haven't already, and don't forget, you guys, and I'm serious here, leave a comment below. You guys keep me going. I can't always respond to everything, but I definitely try. Now, where we're going to start today is jumping into my local MLS. Now, remember why I'm keeping us in the small Kingwood area box. The reason I'm staying in this small box in Kingwood is the data is limited. I can't create a biased narrative. I can only access the data on what's going on in the local market. So that's why I'm sticking in to the Kingwood box, even though I can get so much more data elsewhere. But I also want you guys to develop a similar strategy. Now, let me talk about price per square foot right now, okay? Now, again, when I'm looking at houses and I look at price per square foot, that is a baseline tool that you can use to kind of just look quickly through a bunch of properties. And if you find a property that matches where you want to be for price per square foot, you could do a ton more research on the property. But again, I'm just showing you guys one very small tool that you guys can use as well to kind of give you guys an idea of whether or not it's a good deal. Now, obviously, there's a lot more due diligence than just price per square foot. And I also want to tell you guys how I come up with my price per square foot. You have to access sales data from 2021 and 2020 to see what houses were selling for in the area that you want to purchase in. Now, once you have that data, you're able to calculate roughly price per square foot in 2020 and 2021. Now, if you can't access that data, take the opportunity to reach out to a realtor and start interviewing them. Within the interview, ask them to give you guys price per square foot in the areas that you want to purchase in. And it gives you a good opportunity to see whether or not the agent is worth anything. But regardless, you guys, let's hop into the local MLS right now. I've logged into my local MLS. This is the agent's view here, guys. And I'm going to zoom in north of Houston, obviously south of New Caney. And this is where we've been sticking to. It's a little frustrating for me because I want to access so much more data, obviously, but I'm keeping us in the small box again because I don't want to, create some biased narrative. But what I want to show you is this is the new community here that I've been watching. And also here's new construction up here that I've been watching. I've been watching them because they haven't made price cuts. You guys may remember me saying that they have not made price cuts. So I'm going to show you guys these 4 houses right here because they've all finally started, showing price cuts. Take a look. So here's our first price cut. So this new builder, you're starting to see they actually started doing price cuts. It's not enough still. It's only a slight price cut. But again, you guys, it is a sign of things to come because it's not only that house, it's also this house right here. And you're going to see the same thing here, another price cut. But again, you guys, not a lot. They're just starting to buckle. Now, this builder, in my opinion, is a little bit prideful, and it's taken them a way too long to start price cutting, but it is what it is. Let's take a look at one more so you guys can see. All right, another price cut right here. And they're starting off small, right? They're not doing huge price cuts, but they're starting off small. But again, this is very important, guys, because we need it to spread. We need multiple people to start doing price cuts. But let me show you an area that I believe is essentially going to be a huge opportunity, probably towards the beginning of next year, maybe the end of next year. And it's this little pocket right here. This new construction developer right here, guys, keeps throwing, look at all the inventory they have. They keep throwing up inventory when they can't sell what they have already. So I believe this section of houses right here, I don't think it's going to sell. I think I'm going to be able to snag a house right in this pocket right here for, pennies on the dollar. So let's watch this pocket right here and keep an eye on it because I'm saying that that builder, that new construction builder in this pocket is going to fire sell these homes in the coming months. So now let me show you some really nice price cuts, you guys. I'm going to start at this one right here. This one is in the 318 price point, but I'm going to show you, this is a very, very good price break right here, guys. It basically represents 15.6%. And this is a recent price cut. This was price cut October 6th. Again, $59,000 or 15.6%. And here's the thing, you guys, and this is really what I'm trying to show you. So what this demonstrates is this is more in line with the market. It's a little bit under market value, in my opinion, at $116.44 a square foot. So we're going to take a look at some additional price cuts, and you guys tell me, whether or not it's a good deal. But here's our first one, and obviously a 15%, you guys, a 15% price cut. Insane. If someone would have made an offer on this house 1 week ago, they would have paid $59,000 more for this house. Let's take a look at another house right now. All right, here's another one right here, a little bit south of where we were just at. Take a look at this one, guys. This one's also super nice. Now, this one, as you can see, is about $45,000 price cut. This was done, you guys, October 6th. So you can tell that these people are starting to buckle. Again, it's for $45,000 or 13.2%. But again, you guys, look at the price per square foot. Someone may run to this and say, wow, we got a 13% price cut. But again, you guys, it's selling for more than it should be, $129 a square foot. Now, also what's interesting is this property is not occupied. So whoever owns this right now is losing money by paying the taxes, the insurance, the mortgage, whatever. So I suspect this is going to be gutted even more. And it's been on the market 126 days. This is exactly what we want to see. We want to see things sitting on the market for longer because what that does is cause sellers to lower their prices. Now let's look at another property. All right, let's take a look at this one for 560. So this is a little bit higher price point, guys. But again, look at this price cut. This is insane price cut, you guys. This was done October 2nd. So this is a recent, everything is super recent price cuts. This dropped $69,000, you guys, $69,000, which represents a 13% price cut. But look at the price per square foot. They're still well overpriced. And that's why I throw in the price per square foot. So I can see, again, if I want to waste time even reviewing it. Now you can see this one has furniture in here. So odds are, they're either going to take it off the market or they're going to continue to lower it because it's been on the market for 76 days. This is a beautiful sign of what's to come in my local housing market. Let's take a look at one more right now with a much better price cut, guys. Now it's a little bit higher price point, but I know you guys love, the really, really steep price cut. So that's what we're going to look for right now. And let's pull this up. Now, as you can see, guys, this is a $100,000 price cut. This was done October 1st. So again, this is all recent data. That's why I'm sticking here. I can only access so much stuff. So you guys see what's happening in the Kingwood area. I mean, things are being gutted and we have all kinds of price points, $200,000 to $5 million homes. And you can see the trend is, the same. Now this represents a 7.7% price cut. So if someone would have try to purchase this property 2 weeks ago, they may have paid $100,000 more. And as you guys can see here, this is $246 a square foot, but this is a much higher, this is a much nicer house. So obviously houses in this neighborhood are going to be selling for much more than $120 a square foot, which is why it's so important that you guys get with a realtor. If you can't figure out what price per square foot was, back in 2020 and 2021 in the area that you want to purchase, because again, price per square foot is just a super helpful tool that I use, but it's all baseline. There's so much more that goes into, whether or not it's a good deal or whether or not it's a great deal. But what we're going to do now is I'm going to access Fred Economic Data inventory charts and a Redfin inventory chart so that we understand where we're at right now as far as this whole inventory thing. So let's start at active US inventory. Now, here's the thing, you guys, inventory actually went up. So it did go up. And you guys, know that generally the peaks of inventory are about July, but it can be from July to about September. But as I thought, inventory is plateauing and more than likely next month, this is going to go down. So we didn't hit the inventory that I was hoping to see, close to pre-pandemic, which is around 1 million. I think we would have got closer if the market didn't soften in July. I think we would have got a lot more inventory, but it's okay, guys. Nevertheless, we did have an inventory peak. So it went from 727, 199 to 732, 276. But again, you guys, I think really what's more important here to look at is the months of inventory. But I'm saying specifically that, once that chart updates next month, it's going to be lower. I'm really, really confident that October numbers is going to show that we actually lost inventory. But the thing is, demand being crippled is outpacing inventory. So that's why I'm saying it's really a better idea to look at months of supply, because that also takes into consideration the current demand in the housing market. So it gives us a realistic picture of whether or not, of what the housing market's going to do. So let's start with new construction and see where we're at with months of supply with new construction. And then we're going to look at the overall housing market's month of supply for inventory. Let's look. So I won't spend too much time here, but this is the monthly supply of new homes in the United States. Now, obviously, you guys, we need over 6 months of inventory, months of supply of inventory for the housing market to be considered a buyer's market. You can see here that new construction is at 8.1 months. So we're at a buyer's market in new construction, y'all, which is absolutely great. And that's why I keep, constantly telling you guys, these new builders are in super big trouble. They can't sell their houses and they're building like crazy still. So they're going to start fire selling their houses once people don't buy after all of these crazy incentives that they're offering, right? So let me show you right now, though. Let's take a look at the overall inventory, months of supply of inventory for the housing market. Let's look. And I'm going to go into the Redfin update in a separate video. But as you guys can see, overall, we're at 3.2 months of supply. Now, in order for the housing market, this is important. In order for the housing market to be considered a seller's market, we need generally less than 3 months of inventory. So you can see this is already turning back into a balanced market. Typically, anything between 3 to 6 months is considered a more balanced market. So it's rapidly getting there. And you can see that, technically we have more months of supply than we did in 2020. So we're at like a 2-year high of inventory right now as far as month of supply. So in other words, you guys, what the Federal Reserve is doing is working. Unfortunately, we know that they should have started quantitative tightening in the beginning of 2021, but they didn't. It is what it is. So we're in a much bigger mess now, but nevertheless, what they're doing, although painful and violent, it's working, you guys. So let's now dig into what is really, really important right now, which is residential mortgage rates. So we're going to do an in-depth look at all of that stuff. I'm going to look at the poll. I'm going to look at the Fed economic data chart, and then we're going to look at treasuries to see whether or not next week is going to be higher rates or lower rates. Let's start with the poll. All right, so I'm going to show you guys this poll, and then I want to show you a comment that I made, because the problem with guessing the trajectory of the interest rates is that we're only looking at 2 days of data as far as the treasuries. Obviously, we're missing like 4 days of additional data, but nevertheless, we had 4.2 thousand votes. Thank you, guys. I'm going to throw up another poll after this video. Vote on next week's poll as well. But look at this. So my guess is we're going to have a decent bump higher to 6.99%. And 92% of people also thought that the interest rates, when they updated this Thursday, would be higher. But I want to show you guys a comment that I made because I suspected that interest rates actually weren't going to be higher, but that was after I already guessed. But look at this comment. And I took this screenshot yesterday. So this was actually 4 days ago. Now, D1 Endark, basically stated, considering the fact we are approaching an election cycle, I'd say the interest rates will stabilize for a while until post-election. And this was my response. I would have voted for a downward trend if I would have seen the 10-year today. Geez, talk about whiplash again and again. So the reason I said that is on Monday, so after I had already guessed on Monday, the 10-year actually dropped really low. It went from 4% to around 3.6 to 3.65%. So I was like, oh my gosh, that is insane, the drop of the 10-year. So let's see where the interest rates ended up. All right, so this is Fed economic data 30-year fixed rate mortgage, and this is going to be linked in my description. But you guys, the interest rate average went down. We were all wrong. This is the second time I've been wrong at calling trajectory. So darn it, I was loving that streak. But you guys, the new average interest rate is 6.66. 666? I mean, come on, what else do you guys need to know? Not to buy right now. The average rate is 666, you guys. So if you're waiting for a sign, should I buy? Should I not buy? Look at the average interest rate. It's 666. That's crazy. But what that represents, guys, is only a 4% basis point difference. So, it's not a huge change, but it did not go up like most of us thought. Now, one more poll before we get into the treasuries. I asked you guys, when will the Fed pivot? Essentially start lowering interest rates again, stop quantitative tightening. And look at, there's 4.7 thousand votes, and 57% of people thought the Fed would pivot in 2023. 34% said 2024. Now, I voted for 2023, even though they said they're not going to pivot to 2024, because I don't think they can make it that long. I think they're going to, because again, and I also don't trust them. They have never, they've never stuck to the plan. They're not even selling mortgage-backed securities anymore. So I don't think that they're going to stick to the plan because they don't have a track record of doing that. I think they're pivoting in 2023. So again, I don't know that our buying opportunity is going to be like in 2008, where we had 2 to 4 years. I think that window is going to be much shorter. So you guys need to stay ahead of the unaffordability so that you can be a winner in the price crash that's coming. Now, let's go back to the treasuries and see where we're at. All right, guys, so here's the treasuries right here. And again, this is only basically 2 days of data, Thursday and Friday. And this is, from the morning today. This is as of 9:38 a.m. Now, the 10-year actually went back up. This is crazy. And it went back up because I believe the job numbers just came out. I want to check that in a minute here, but it's 3.9%. That's astronomical. I'm going to say, we're going to have an upward trend of interest rates. I hate that I was wrong last week, but I wish I would have changed it. I can't change it though. Once a poll is issued, I can't change my answer, but I'm going to say we're going to have a decent bump up to 6.8%, which is going to represent 14 basis points. So I suspect next Thursday it will be higher. Do me a favor and vote yourself. And if you want, also tell me why. Now, here's the thing. I also did another poll asking you guys, whether or not, what's more important, interest rate or purchase price? And I want to make this clear. Whoever has the most likes to their answer is going to win a $100 gift card. That this competition ends on Sunday. So give an answer, but also vote on the answer that you like the most. And I'm going to show you guys right now. Take a look. So you guys can access this and participate as well by going to my community tab. Okay. And here's the question. What is generally, okay, there's always a crazy situation that can exist, but what is generally more important? Purchase price or interest rate? Okay, so we have about 1,000 votes. I pulled this last night, so this isn't updated. But, and I pinned this to the top. I'm hoping y'all are going to make me proud. Comment why you answered what you answered below. And the answer with the most likes gets a $100 gift card. So what I'm trying to do, you guys, is I'm trying to create more engagement within our community because I can't always answer all of the questions. So I want you guys answering each other's questions, and I want to make sure that you guys are learning from what I'm saying. So I sent that question out there, and I really want to be proud of you guys. I've seen a lot of the answers. There's some great answers, but you guys participate in that challenge so that you guys can win potentially a $100 gift card, and that ends on Sunday. For my Hurricane Ian video, I told you guys that all of the proceeds that I would be getting from that video would be donated back to Feed Florida. So I want to prove that to you by showing you how much that I made on that video and the receipt of donation. Take a look. All right, so from the bottom of my heart, you guys, thank you for participating. So we generated $96.69 from this video right here. So all I did is I'm gonna round this up to $100, and I donated it back to Feeding Florida. So I'll show you guys that right now. And that was because of you. So you guys technically donated to them as well. So I thank you for that, but here's the proof. And again, you guys, I do this for transparency and accountability, and I wanted to challenge you guys to do the same yourself. But as you can see, I donated last night 10-6, and I rounded it up to $100. And again, you guys, I did that because I want to help. When it was Hurricane Harvey here in Texas, I was knee deep in ground zero. We actually pulled out 88 people. I saw 3 elderly people get swept away in front of me and 3 firefighters get swept away in front of me. So it changed my soul. It is wicked, wicked. And, the amazing part of all of that is how strongly the community came together to help one another. So, for all the listeners in Florida, y'all keep doing good, keep loving each other, because there is light at the end of the tunnel. So just keep working hard. It will get better. Now, you guys, this is a long video, so thank you for hanging on. There are 2 points that I want to end with. Now, point number 1, as interest rates continue to skyrocket, remember the price cuts are going to lag behind that. So what I need you guys to understand is things are getting a lot more unaffordable right now. So it's really important that you guys stay ahead of that, right? You need to remember, because payments are a lot more right now, stay ahead of it. How do you stay ahead of it? Get out of consumer debt and try to make more money. That's basically what you need to do because of debt to income ratio. So remember, stay ahead of the unaffordability because we want lower priced houses. So stay ahead of it. Now, number 2, right now is the perfect opportunity for you guys to start interviewing realtors. So I'm going to challenge you this coming week, start interviewing realtors and ask them to provide you guys with roundabout price per square foot numbers for 2020 and 2021 for the areas that you're interested in purchasing in. And that's a great way to find a realtor that actually has hustle, integrity, and honesty. So I suggest you guys do that right now so that you can figure out roughly what price per square foot was in 2020 and in 2021 in your local housing market. And again, it gives you a great opportunity to not wait to the last minute to start interviewing realtors. Don't wait to the last minute. Do everything well ahead of time, so we don't get sucked into falling in love with a house or any type of drama. You guys need to be well prepared, especially because things are becoming so unaffordable. But the thing is, guys, we actually want that. Now, other than that, you guys, I really appreciate you following along with me. Sorry for this long video. I had a lot to say today, but please do me a favor, comment below. Let me know what value you guys got. Now, if you're out there investing in real estate, I wish you luck and I hope you win.